Okay, testing. 1, 2, 3, testing 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France, they stay mainly in your pants. Good morning, everybody. It is a Monday, approximately 8:02 a.m. in New York City. We're about 90 minutes away from the U.S. stock market open. Welcome to Forex.Today. Thank you for being a subscriber, one of 19,000 foreign exchange traders. So without further ado, let's get on with it. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Yo, 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 guten Morgen. My name is Wayne McDonald. I will be your host today. I'm the Chief FX Market Strategist for TradersWay.com, a boutique foreign exchange trading firm with liquidity partners around the world. Visit TradersWay.com, open up a demo account today. Today is going to be the day. I'm going to throw it back to you. So, ask questions, get involved, take notes. What is the reason for us meeting today? Well, we can do some technical analysis, some fundamental analysis, and we put all of this together with the overriding goal of putting together trade plans. You cannot control the market. There are millions of variables that will influence price over time, but you can control your trading behavior. And that's the whole point of analysis. So I will teach. I preach to teach, because some of you never had this. So again, ask questions, get involved, write things down, take notes, and then when you're done, I highly recommend under the recording of today's live stream, that in the comments section below the recording, that you put your notes in there. Therefore, you can search your notes and find very specific videos in which you may wish to review. So you could say, like today, if I covered something interesting, timestamp it, take some notes, and then put it in the comments so you can actually zip to that specific part of that specific video to get that specific information. That's what I would do if I were me. So again, take notes, leave comments, click the like button, and of course visit TradersWay.com and open up a demo account today. Hey, what up? So let's take a look what's going on. Dollar has some strength. Okay now. And yen has remained weak. Fine. Okay. Fine. There's a lot of news related to the dollar, and that can provide such hiccups. And there's a lot less influencing the yen, or at least counter-influencing the yen. So the yen is weak as I would hope for. Great. What else is going on? Well, Aussie recovered, which is nice. It's kind of trending up on this hourly chart. And I thought Kiwi would catch up, and it did not. Booze, at least overnight. Euro is quite neutral, and pound is sort of, fits and spurts. Okay. Right now, the big winner is CAD, and oil, WTI. Remember when it was $70 a barrel? It's now $75 a barrel. So that benefits the Canadians. So very cool. So let's take a look at these commodities. Both, we can do gold, oil, and Bitcoin if you want. There's the my oh my WTI on our way to 76. Look at our trade plan. Yeah, boy. Looking pretty good. looks about right, don't you think? Pretty reasonable. I'm pretty happy with that. Okay. Remember, all of this is based on macroeconomics. Before we even look at the chart, this is what our assumption was. Starting when in the year? The third week of August. Oh, snap. Not even looking at a chart. Our assumptions were from this point up. Cool. So that's at 60. Then it worked its way to 70. And now we're on our way where? At 80? Well, hold your horses. Maybe. But the thing is, I don't know if oil is really $100 a barrel, but maybe it is 80, or maybe it's 80 and then back down to 70. But nonetheless, based on a whole bunch of analysis of the entire world, we did have up from this lower area. But I don't think up forever either. Okay? FX Pivot Trading says, hey Wayne, good morning. Do you think there could be a bigger reason that meets the eye for simulation? I'm not sure what you're saying. So you're talking about the Bank of England and the Fed speeches, okay? But what do you mean by a bigger reason? That is a ginormous, redonkulous reason for changes in yield curves specifically. So I'm not sure what you mean, or is it just coincidental? I'm not sure what you mean. And by the way, it couldn't be coincidental if I had plans 7 months ago based on what I thought would happen during that period, and then they came out perfect. Then I don't know if I certainly wouldn't believe it to be coincidental because I had plans for it. So it would reinforce my own nonsense. Even if it is coincidental, I'm going to believe that it's not coincidental because I had plans for it. So I don't know if I can accurately answer that, nor do I fully understand the question. Sorry. Do you mean the speeches themselves? Lagarde, Kuroda, Bailey, Powell, or okay. No, okay, so I think I understand more now what you're saying. The speech is like, why did they all get together and in a very short period of time, everybody speak? Okay? It is indirectly coordinated. Okay, it's not like they all got together and said, let's do a bunch of speeches, here's what we're going to say. But the Fed, being a reserve currency, right, it manages the reserve currency, indirectly influences all the other central banks. For one, many central banks around the world are pegged to the dollar. So if the Fed moves, they have to move. Also, indirectly, for example, the Fed allows interest rates. By the way, I don't mean Fed funds rate. I mean yields. Right? The Fed funds rate, okay, will directly and indirectly impacts the yield. The yield directly and indirectly impacts the cost of borrowing in US dollars around the world. So anyway, so you got central banks that have pegged, but then you have countries and corporations around the world borrowing in dollars that are directly impacted by the yield. So for example, you have variable rates. So as yield on the 10-year T-note or 2-year or whatever go up, then your debt goes up. So if you're a foreign country, like let's say South Africa, you would need to raise your interest rates, but you can't really do it until the Fed says they're going to. And when the Fed says they're going to normalize, they're going to taper, and in a couple of years they're going to raise interest rates, then that gives permission to a country like South Africa or other countries to raise interest rates to help them deal with their higher borrowing costs in the future in terms of dollars. Now, when you look at corporations, then you get a company like Evergrande that just one day defaults on loans because their interest rates have gone up because it's tied to the yield on the 10-year T-note, which has gone up and is expected to go up much further. And those loans are in dollars, which means relative to the value of the yuan gets much more expensive. And you'll see wherever Evergrande is paying their debt in renminbi, but they're not paying it in dollars or euros. So going back to the question, when you get all the central bankers around the world doing speeches, is it a coincidence? And no, because they got work to do. And is it coordinated? It's not coordinated in the sense that they're all working together, but what their policies are related. Okay? So could it be? I wouldn't make a big stink of it. It's indirectly correlated, okay? Or coordinated, indirectly, like not directly. They don't actually sit around, but their policies are interrelated for sure. Okay? All right. So anyways, oil going up. Nice. Okay? Jeffrey says, hey, how does like durable goods impact the pair you're looking at? Well, first of all, durable goods in the United States would only impact the US dollar. The second thing is, how important is durable goods to the value of the US dollar? Okay? Why would durable goods, or how would durable goods impact the flow of money around the world? Because remember, the value of the dollar is not determined by the economy. It's about global trade. If dollar doesn't cross a border, it will not change value. So that you could have an amazing US economy or a horrible US economy, but if it's a closed economy, the value of the currency doesn't change. So now you'd have to look at durable goods, especially, let's say core durable goods that removes airplanes and stuff. Fridges. Okay? The demand for fridges goes up, or the demand for fridges goes down. How will that impact the dollar? It won't. Okay? Cool. Brad says he's up 800 pips since the swing trading group. That's good. I think on this account, I'm up about 300 pips. So you took more trades than me. Cool. But I took all the trades in the meeting, or it placed all the trades in the meeting. So those sample trades that I took, yeah, they're about up 3. So you're up 8. So that's good. Kicking it. Okay. So Jeffrey, what does impact the value of the US dollar? There's two things. Global trade. Okay. So you have to look at like how many dollars are going into the US, how many dollars are leaving the United States. And the second thing is money supply. Now, who controls the money supply? Well, that's the Fed. So ask yourself, if half the equation, so this is demand and this is supply, right? So if the Fed is in control of supply, does the Fed give a damn about durable goods? Probably not. Why? What's the Fed's mandate? Inflation, right? And then, right, economic health, let's just call it jobs. Okay? So durable goods comes out 2.4 versus 2.3 expected. What does that mean for the dollar? Not a damn thing. So what you should focus on then is demand side of global trade, which we call macroeconomics, and then supply side of money. So this is demand side for money, and this is supply side of money, which we call monetary policy. Okay? Cool. But remember, news is news is news is news. If it doesn't impact global trade, and if it doesn't impact monetary policy by the central bank, then by and large it's irrelevant, especially if it's domestic only. So one of the first things you do in economics is you learn about different measures of economic activity, right? And you always start with a closed economy. Okay? You always start with that because it's easiest. So there's currency, but it never leaves a border. You don't do any trade outside your borders. Okay? So you're spending a lot of time doing microeconomics, trying to get your per unit cost down and all that kind of stuff, and increase efficiency, lower your prices so that you can increase demand for your products and services by your internal market. And then you slowly open this market to at one point, to partially open, to fully open, and you'll see, well, a lot of those things are still the same, but you have to look at macro, which means how's the economy over here doing? How's the economy over here doing? And what's the economy over here doing? And how's your trade relationships with these other economies? And then on top of your economic analysis, then you have to do your currency analysis. Okay, and it gets much more complicated. And you'll do things like, so you got demand over here and your supply is vertical, and then you got to do this domestically, and then you got to do this internationally, and then you got to combine this chart with that chart, blah, 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 blah. Blah, 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 blah. So don't make a big thing out of news, Jeffrey. Most news is irrelevant. There are interesting economic points, that is for sure. But all I do is I look at the news that's available, and more importantly, the trend in news, and ask myself, what's the Fed going to do about it? Okay? So if durable goods comes out 2.3 versus 2.4 expected, is that bad? Well, first of all, there is no bad. I'm just more interested in will the Fed need to respond to this earth-shattering news event that came out 0.1 different. Okay? So, all right, cool. So anyways, let's take a look. Let's do some dollar pairs. All right. So as Brad says, a lot of these trades that are open on this account were created during our swing trading meeting on Thursday. So, we were here at that moment. The trade plan was to buy a dip at support. So I put an order there. My stop's down here. And this trade is essentially break even. Cool. So what else is going on? Well, I'm looking at this as an inverse head and shoulders. Cool. So the way you would measure an inverse head and shoulders is you want to look for a neckline. Okay, where's the neckline on this thing? You would make some sort of connection like this. So you can see I'm kind of measuring that. Great. So now you take this and you put the neckline there, and there's the target. Okay. So based on the size of the head and shoulders, you would estimate up into here is where we're going. Great. This is the daily buying pivot. This is the weekly buying pivot. The daily target is here. The weekly target is here. So we're basically saying 1.38 is a reasonable target, and it will probably hit it tomorrow, not today. Okay, so barely 100 pips, pretty mediocre, but you have to understand it's not an uptrend yet. Okay, we got to get through all this noise, and look how wonderful that top was. Very, very, very logical top. So it doesn't even begin to get close to maybe being an uptrend until really next week or the week after. So we got a long ways to go before this pound dollar works out. Okay, so right now it's a little day trade, pissy little day trade, pissy little swing trade, and we should be able to squeeze 100 out of this. Okay, right now I'm at break even. Okay. Cool. Take a look at euro dollar. Okay. The plan when we were here, okay, you can see we got this measured out multiple ways. Plan A was in here, which was Friday. So Thursday we were up high. The idea was Friday catch a dip and have it rally up. But once again, we said US dollar was going to be noisier than the yen. And this has been true. So if you are still a bull, the next opportunity would be today, and you're going to try to front run it off of that area. But this is a step down, and it's very cautionary. So you could take a pause. Depends on if you consider yourself conservative or not. And by pause, I mean let it make a higher high, higher low again before you start buying. Okay, so this, you have this as a potential shot, or wait till, well, this is Monday, Tuesday. You might have to wait till Wednesday before you get a decent trade. So it really comes down to the type of trader you are. Okay. If you're more aggressive, you're going to call this a double bottom of a double bottom. Okay. So what do you think? Which one are you? Are you going to trade the double bottom of a double bottom? This is the right leg, the right shoulder. Okay. Or are you going to wait for the higher high, higher low and get a trade tomorrow or next? Okay. Well, that's your decision-making process. Kiwi, like I said, Kiwi's been lagging. This was a different example of stop placement. We had a discussion of measuring your own trade history to find your appropriate stop. And we were talking about, 33 versus 50 versus, 99 for the different styles and all that kind of stuff. And so I gave an example of if it was farther away, how would it work out? But nonetheless, this trade, again, not very productive. So we'll see. Kiwi, I was disappointed in. I thought it was going to gain strength overnight. Okay, so last night in the Asian session, I thought this was going to move like this. So currently disappointed. Okay, stop is placed fine. If it wants to fall and make a lower low, then I don't need to be on this anymore. And I'll regroup. Aussie. Okay. Well, not falling. Not really bullish. This is incredibly bearish right there. Okay, this is incredibly bearish. So I can see both bulls living on this one and bears living on this one. So I don't really want to trade it against dollar. Like I said, dollar seems to have noise as people try to figure out what they need to do with the new Fed policy. And then lastly on this one, on Thursday we were here, right? We were down here. I said you wait for the pullback. I had to stop in here for Friday, or not stop, an entry. And great, entered Asia with a lower low. Okay, and that's that. And so now the next step is maybe we can get, right, a lower high and a new lower low tomorrow. Okay, so I'm trying to connect these dots, right? I kind of want this to be trending down. Okay, I look at, again, dollar is strong. I don't want it to be strong. I don't think it should be strong. Canadian dollar should be strong. We saw, oil prices high. So you would think that that in of itself would influence this downward move. We just need some dollar weakness, okay? So there must be a shift in the bond yields, or we're just waiting for American trading to start 1 hour from now, okay? So I got to hang tight. All right, so there's the noisy dollar. Let's take a look at yen. Okay, as we saw, Aussie is not strong. Okay, maybe later it will be. But going back to the swing trading group, we were here, we had made a higher high, so I set up a buy for Friday, bought it down here at 80, and has now rallied up. Okay, the market opened here Sunday, and we're just maintaining here, so there's a little bit of a front run for tomorrow. Okay, and so maybe this pushes up. I think what's happening is that, the market is allowing sort of the moving averages to squeeze it up to the next level, is what I'm hoping. Of course, this could be bears up there, and we'll never get through 81. Well, I think there could be bulls and less bears. So anyway, so I'm watching this. Technically, this market on a 4-hour is bullish. And what I'm suspecting is this moving average is actually higher and a little bit steeper because it's lagging, and that, the rest, there should be some bullish lift off here around 80.5 where we are now. Cool, right? So that's, I don't have it yet, but that's what I think will happen later today and tomorrow. My first trade is here, higher high, higher low, buy. My second trade is higher high, higher low, buy. And I expect this higher low will produce a higher high, just like this one. The reason you buy a higher low, right? The reason I bought this is I expect the higher high. So the reason I bought this is I expect the higher high. Okay? So I imagine it will take a day or two, and we will at least test 81, hopefully breach it. Thank you, Thiago. Yes. 1.5, right? So that tells me the US dollar should weaken. So I guess we're just waiting around for trading in the New York session. And then the dollar will weaken and I will get paid. Taking a look here. Okay. At this swing trading group. Okay, this is Monday, this is Friday, this is Thursday. So we were way up high, and we had a conversation about how do you buy when it's too bullish. What we call out of position. And so I gave an example there. How do you do it? And I said, well, if I was me, I would wait. And I gave examples of different places you could buy this. But nonetheless, how do you buy it out of position? And wherever it was, so this is Monday, this is Friday, so Thursday we were up here. So somewhere in here I bought it. I can't remember why. And so we're here, stops at break even, and it's climbing. And this is another example of the EMA kind of pushing things up. And if it does, I'll be rewarded. If not, I don't lose any money. Hero or zero. But once again, yen is generally weak. And I would think, with oil prices being high, that Canada would do aight. Okay? So I would look at that and go, oh, okay, well, it should do fine. It should do fine. And if not, I don't lose anything. But it should do fine. This should likely go up. Even if there's a bigger pullback, even that should hold. Even if it does that and rallies tomorrow. So down today and up tomorrow, I should be able to survive that. And remember, that's buying out of position instead of waiting for a pullback. Okay? So that's an example of an aggressive trade. Sometimes it's good, sometimes it ain't. Okay? Cool. Looking at euro yen. Okay? Got to switch this out. Let's go to day trading bullish bias. Clean this up a little bit. And here's Monday, here's Friday. So here's the swing trading group, right? Or that's Thursday. How do you catch this one? Oy vey. Okay. So I am on this on a different account. So I'm watching this really, really closely. But what do we see here? Well, this is the move up. Okay. Again, the one anticipated after the Fed meeting. So that's good, right? You have the up, the down, buy off the 21, up, down, buy off the 21. And now we have a bit of consolidation. And you might say, well, it's consolidating, it's bending the 21. This could be the end. Well, I could see that obviously 130 is an issue psychologically, but also money tends to come out on Fridays and then come back in on Monday, right? And if it comes in and there's true weakness in this trend, then people will sell against it, right? And they'll say, there's no way in hell we're going to get through 130, and people take it down. Or they come back and they say, okay, game on, everything is stable, nothing happened over the weekend, yields are still going up, so euro yen should go up, and people just buy back. And this, when you look at sort of the London Open here, up, 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 higher, high, what do you think New Yorkers are going to do with the down, down? Treat it like a higher low and take it north, right? So that's good for me. So I'm reassuring myself that freaking out and taking profit is currently, technically, would be probably not the right thing. So up to 30, we'll test 130 today, come back, and then breach through 130 tomorrow. What do you think? Smell like a plan? Zip over here, beast. Plan A, plan B. Here's our discussion of a 21.4. Okay, here's yesterday's day trade. And yesterday's day trade was buy at 151. This was actually Friday's trade, if you want to go back far enough. And now we're at 152. I know, right? Cool. So what's tomorrow's day plan? How about that? Be interesting if it came all the way back to 151.50. I'm okay with that. 70 looks more realistic, but 50, I get it. Wayne, do you think some Japanese yen temporary? No. Okay, I'm going to sell the Japanese yen every day until March. Okay. Jeremiah says, Wayne, so should we ignore weekly and monthly pivots? Why would you think that? Never. Never. Absolutely never. Okay? You need to analyze all these and make decisions. Okay? So if you see key components of, let's say, a monthly, you need to recognize their importance. Okay? Because monthly supersede, right? It goes like this. Daily is important. Weekly is more important. Monthly is more important. Okay? But what's more important than monthly pivots? Seasonality. Okay? I'm only planning for these daily pivots. Yeah, but I've already done all this other work. I've already done it. That's the thing. And I meet 3 times a day. I meet with my day trading group, including this meeting, right? So I meet, every 5 hours I'm meeting with my live trading groups. So like we got all this in check, right? So the only thing to add is where are we in our plans, right? So that's why I'm not looking at them. We should already know. Okay? So for example, what's the target for October? What's the target for pound yen in October? If, as a projection, not even an exit, but as a projection, R3. I came up with that target in February. I said October would go to R3. So that's weird, right? No. My seasonality supersedes monthly pivots. And that would be my alpha. Okay? But would I ignore it? No. Because then if you're ignoring it, you're just not analyzing. Okay? So what you're looking at right now, daily-wise, should fit into your weekly and monthly plans. This is just a front run for tomorrow's trade. What you just saw, this retest of 52, is tomorrow's trade. It's actually 70 or 80, right? 75. Okay? That's tomorrow's trade. People are already doing tomorrow's trade. Johnny says 157.46. Well, the interesting thing about that is that's not actually the target. That's the projected high for October. But I might be going for the projected high for November or the projected high for December. So that could just be, another brick in the wall. Wayne, what about trading USD yen? I never do it. It makes no sense to me. I'm a macro trader. Those are both funding currencies. So they should both be denominators. I would never trade them together. Okay. So I have 2 trades on this one currently. The first one, once again, here's Monday, so here's Friday. So on Thursday at the swing trading group, we were already up here. So I said, well, if I were me, I would wait for a retracement. So I put an order here, as you can see. So I bought it on Friday. Here we are on Monday, and I'm just farting around just over break even. My stop is still here. And basically nothing's happened. Okay? And I have this on another account too. Probably exactly the same price. It's just farting around waiting. Kiwi, once again, Aussie was reasonably strong in the moment, and I thought if Aussie takes off, then it'll drag Kiwi with it. And of course, just nothing has happened. My other trade is down here, okay? And I think this is a Fed meeting trade, right? This is Thursday, so I set this up on Wednesday. So you have the double bottom, higher high, higher low, okay? So that one I'm in at 76.76, okay? It went all the way to 78 and above, okay? So right now I'm sitting on 100 pips profit this one, sitting on break even on that one. Pretty simple trades. Easy peasy lemon squeezy. So once again, these trades I set up and do with the live group. And we did a special meeting just for the Fed meeting. So we got together and watched the Fed meeting together and set the trade up here. Nice. Nice. Diago says, hey, Wayne, I spent the weekend studying about the 10-year, reviewing 2008, 2012. Amazing how yields work and how money flows. Sure is, huh? Yeah, amazing, right? Theta says, Wayne, do you believe in central bank divergence trading? That's what currency trading is, Theta. That's what we do. Ananda, the link is in the description below. It says, get my chart templates here, and gives a link. Look at the description below the video. So anyways, Kiwi lagging, pound took off. That's great. All good here. That 151 came into play multiple times. All good in the hood. And just waiting for additional yen weakness and additional dollar weakness, which actually hasn't kicked in yet. So I don't know if it's additional. Okay, so yes, about 5 people that have asked for gold. So let me do gold now. Okay. All right. Here we are. So technically this is still bearish, but technically gold has found support. So your big question is, are you still bearish? Now, if you are bearish on gold, you have resistance here around 1760. So you'd be a seller. But you have to treat it now as range bound, not necessarily bearish. So what you would do is when it's up here, I have another one at 1750. So the 1750, 1760, 1770 area is a sell. So you sell and you hold. And the idea is that if it breaks, you get paid. And then if it breaks, you wait for the retest and then you sell it again. And you'd sell that one at 1750. This one you're probably selling at 1760, 1770. So this whole area right now is a sell zone. Okay? But you wouldn't sell low, you only sell high. So now that it's kicked off 60, you might just be able to kick it off of this area here, which is 1750. Okay, but that's a little late. It's a little sloppy. But whatever, I guess maybe you're still on your first coffee or something, right? So maybe, just maybe. But if you get the breach, then you want to take the pullback and get it 1750. Okay. Mohammed says, Wayne, does yield work the same for other currencies? Well, look, what we're talking about is the amount of influence companies and countries are trying to place on the attractiveness of lending them money. So does that work? Of course it works, dude. Why wouldn't it? Now, if you say, well, does it work the same way as the reserve currency? Well, I'd say, well, is the other currency you're analyzing, is that a reserve currency? And you're like, well, it's not a reserve currency. Well, then there's going to be other things influencing the supply and demand of that currency. But does it work? Yes. Does it work the same way? Probably not. But could you compare CAD versus Aussie? Yes, they would be more similar than Kiwi versus US dollar. Why? What's the difference? Well, this is a reserve currency and it's special. It's very special. Okay? Ananda says the indicators don't come as part of the swing trading course. No, in the day trading course, there's a couple of indicators because for the daily pivots, yeah. But the swing, I don't think in the swing trading, no. But in the day trading, yeah, there's a few. But look, it's $5. I mean, just go to MetaTraders, pay the $5. Okay. Do you know which assets the Fed will use to taper? Here, I'm not sure what you mean. That's a very confusing question. Let me try to. Taper means reduction or reduce. So it means if the Fed is buying 80 billion in treasuries, because remember the other is mortgage-backed securities, okay? Then a taper means in December they'll only buy 70 billion. And in January they only buy 60 billion. They're slowly reducing. But it doesn't mean they only buy 60 billion versus 80, but then they buy 20 billion in gold. No. They're just simply buying less. And then they have a balance sheet of treasuries. We'll just call them bonds. The cool thing about bonds is on a specific date. Okay? You could say on March 15, 2027. The bond will expire and it's no longer on the balance sheet. It just goes away. No. You're totally misunderstanding me here. No. They're just buying less. It'll balance. Because when they buy, okay, look, so you have a balance sheet. You have assets. You have liabilities. Okay? On this side, you have cash. You have bonds. So, let's say in January, the Fed, instead of buying 80 billion, buys 70 billion in bonds. How will this affect the balance sheet? Well, cash will drop. Bonds will go up. It's still balanced. Okay? So cash drops by 70 billion, bonds increase by 70 billion, it's still balanced. Okay? Theta says quantitative easing's got some maturity date. Not quantitative easing, but the asset they purchased has a maturity. So in that case, the bond will expire. The treasury will expire. Okay? But all they're doing is changing cash for bonds. So cash goes down because they spent it. They gave the cash to the bond dealer. What did the bond dealer give the Fed? Bonds. So the balance sheet is still balanced. Okay? So guys, that's all in FX Bootcamp. If you want to learn how to balance a balance sheet at first of all a commercial bank and then later at a central bank, that's all in the fundamentals course. No, Mahir, not on the short run, no. If in that case, it wouldn't balance. Okay? Okay? What would the Fed do if it wanted to reduce the money supply? Buying gold would not reduce the money supply. It would increase the money supply. So what would the Fed do, Mahir, to destroy the cash they created during quantitative easing? Okay? Again, buying gold would only add more money to the economy. The Fed puts gold on the balance sheet, but they gave up cash, so now the cash is in the economy. So that didn't work. So what could they do, Mahir, if they thought there was too much cash? Right, so they would sell the bonds they bought during quantitative easing. Okay? Okay? So that's good, right? Well, it's more of selling bonds. It wouldn't impact the Fed funds rate, but it would impact yield. Okay? Wayne, could Bitcoin take the role of gold? Yeah, it could. Right? Like when people buy gold as a hedge, like they're not using it to make jewelry. They're not using it to make computer electronic components. They're not using it to do anything except own it. Then you can own anything that fills that emotional void, right? So if you're like, well, I don't want to own physical gold because it's expensive. Well, you could own digital currency because it's cheap. Okay? Aaron says, hey, Wayne, you got me rocking the market, not taking my foot off the gas pedal for 4.5 years. Good. Send me gifts. Send me gifts. If you're crushing it and killing it, kick down, come clean. Don't be a holdout machine. Cool. All right. So if you are a bull on gold, what we need to do is, if I can grab this, there we go, get through that. So you have sort of the equal but opposite play here. You're buying low here, or you're buying low here. And you're like, Wayne, that's higher. Well, it's a higher low. So if you get a breach, you'd do this. So you got plan A down here, plan B there. And of course, we got to get through this, which is going to be a problem tomorrow. And then we got to get through that, which would be a problem the next day. Theta says a cigar would be good. You know, I had a friend come over on the weekend, and you know, when he comes over, we smoke cigars. And the last 2 times I gave him Cohibas, which are you know, they're nice cigars, right? And he came over, and I'm like, oh man, you're gonna be sick of it, but I hope you're okay with another Cohiba. And like, I'm apologizing. And he laughed. And he's like, oh, yeah, no problem with the Cohiba, right? So I go down to the humidor and I'm rummaging around and I'm like, oh, and I find a box. So I grabbed that plus a box of Cohibas, right? And I head back up. I'm like, I don't even know what this is. And it's dark outside, all that kind of stuff. I'm like, I can't even see this. I'm like, here, you look at these two boxes and find the one you want. And he's like, I can't see this one. I can't see this. It won't open. I'm like, it won't open? He's like, does it have a latch? And I'm like, I don't know. So he gets his cell phone out and turns the flashlight on. It's not even open. I'm like, oh, I just found it in my humidor. I don't even know what this is. So he turns it with the flashlight. He's like, well, it's still sealed. So I'm like, okay, cut it. I'm like, what is it? And it's like, oh, Monte Cristo from 2006. I'm like, oh, that's good, right? 15-year-old cigars. I'm like, that's good, right? So anyway, so we opened this box of 15-year-old Monte Cristos that were in my humidor. I'm like, honestly, I didn't know they were there. So we opened them up and, oh my God, they were good. Unbelievable, just unbelievable. But yeah, so anyways, you don't need to send me more cigars. When I'm finding entire boxes, yeah, I guess I'm good there for a while. But yeah, they were nice though. Holy smokes. Hope said, did you have cold weather? Yeah, actually we did. Yeah, it was cold. It got cold really quickly in that night. Yeah. And Hope, wow, you're in Asheville? Yeah, very cool. Yeah, it's getting to the point where I had plans to visit in mid-October, but we changed the plans. But yeah, I'd like to get up to Vanderbilt? Probably Christmas time. But yeah, I'm sure Asheville is wonderful. No, the Biltmore. Sorry, the Biltmore. Yeah, so I'd love to visit the Biltmore. I think when they have the Christmas decorations up and maybe an inch of snow or something. Do you live there, or are you just visiting? Cool. Is that right? You're up in Memphis and Nashville? Yeah, cool. I'd like to do a Forex conference in Asheville. So that's one of the places I think we could do a meetup. It's cheap and people can fly in pretty reasonably. People probably fly into Atlanta and then hop over, if someone's flying in from another country or across the United States, that probably everyone would fly into Atlanta and then hop over to Nashville. And there's some pretty cool hotels not far from the airport. And then, of course, if you wanted to go into town and go to a cool bar or something like that, you just bus it. Okay. Yeah, okay, so that's where you are, yeah? Yeah, so Nashville is where, right? Nashville, I definitely have my eye. I visited the hotel twice, and I'm like, oh, I definitely need to do something. But we'd need at least 100 people to make it fun. Right on, Hope. Thank you. All right. I guess I think I'm spent. That was 1 hour. Yeah, cool. Right on. So thank you for being here. Thank you for being a subscriber. Thank you for being a client to tradersway.com. Thank you for your positive energy. I know I say it every day, and I don't know if you just kind of stop hearing it, but I want you to hear this. Thank you for being in my life. You're a positive influence. You give me the strength to get out of bed and do what needs to get done. So I appreciate you, and I hope our time together also has a positive impact for you. So I will see you at 3 p.m. if you're in my day trading group. That's our European front run session. So Europeans set up their overnight trades. And then I'll meet again at 8 p.m. And we'll see how the market goes. See if we're be ready for, see if we can get all our tomorrow trades in today. Because tomorrow is too late. We got to do tomorrow today while we still can. Peace on earth. May the pips be with you. May our profits be above average. Thank you, everybody. See you later.